We've seen softness for sure in the metals market, and I don't understand it. I've said this to you for a while. I don't understand the low premiums. I don't understand the softer demand, and I'm more concerned about where we are heading.
During his presentation, Andy Schectman will discuss gold and silver retail order dynamics, illustrating the shifts and prospects in precious metals markets. Stay updated with the latest news and occurrences that are affecting the industry, as Andy Schectman clarifies the intricacies of this mesmerizing industry of precious metals. So don't leave until the end.
Yeah, I haven't seen much in the way of selling, but I will agree that the sentiment itself has been soft. It's eerie almost in the respect that I think you could argue from just about every metric, politically, geopolitically, socially, morally, economically, the world is a more dangerous place than it has ever been. When we look at the amount of gold and silver being drained out of the exchanges, and even the Shanghai exchange, the COMEX, the LBMA and the ETFs, it's unusual to see such muted activity in the retail market. Now, it's not like someone shut off the power as we've seen before to the industry, but it is quiet. It's eerily quiet, almost as if we're in the eye of the hurricane, that the last few years was the trailer or the front edge of the storm that whacked us in many ways. And now it's quiet, talk of a soft landing and talks of inflation being brought under control, and talks of optimism in the economy, and all of this stuff I think is just jawboning and gaslighting, but it's got the majority of the people in this country, I think, maybe have bought it, hook, line, and sinker. And as a result, we've seen softness for sure in the metals market. And I don't understand it. I've said this to you for a while. I don't understand the low premiums. I don't understand the softer demand. And I'm more concerned about where we are heading. Look, you got this BRICS meeting in October where 30 countries have formally applied, another 20 have informally applied. There's 200 meetings leading up to it. We have the election in November. We have war or escalating tensions, which could lead to a much greater war in the Middle East. There are a million reasons why I would think people would be looking to alternatives. We have a banking system that is very fragile. We have all sorts of things that around us, the border, the lawlessness in the cities, all of these things that should be catching people's attention, and for whatever reason, they're asleep at the switch. But this is why so few people ever succeed in investing, because they follow the herd. And when things are cheap and when they're on sale, people don't get it. Now, I will agree or give in to the fact that metals have been on sale for far too long, and the counterintuitive nature of it is such that it can either go unnoticed by the mainstream, be ignored by the mainstream, or brushed off as being something that is no longer effective by the mainstream. Yet we continue to see the most well-funded and well-informed traders on the globe. The central banks accumulate copious amounts of both gold and silver, and I think they are front-running using price suppression to position themselves. And at the same time, the public here is asleep. And when you look at a silver market right now that, is rehypothecated to the way that it is, where, registered silver open interest is 1,642% of the registered silver. In other words, almost basically 1 out of 17 contract holders would get fulfilled and the rest would be cash settled. You start to understand how they are able to create this perception or this illusion of reality that is keeping so many people asleep. I don't understand it, Chris, but yes, other than seeing massive liquidations, which we haven't seen, it's much more quiet than one would expect in the middle of such, I would say, ongoing uncertainty, ongoing chaos, and being led by administration that is leading us down a very dangerous path. So slower than it should be, But the selling part I haven't really seen, as maybe some dealers have. I haven't noticed that. Yeah, I mean, if you look, obviously 1971 is where it started to move higher, and I think that's a really astute way of looking at it. Things are different in this country right now, and the acceleration of debt and the loss of credibility and trust on the world stage have also increased exponentially. These things are relatively new. You know, in 1980, if I'm not mistaken, we were still a creditor nation. And, you know, you see a massive explosion in debt to where we are right now with over 34 trillion in debt. It increased by 2 trillion in 1 year from the end of 2022 to the end of 2023. We're a country with almost 200 trillion in unfunded liabilities, with a half a $1 trillion in trade deficits, and now approaching $1 trillion in annual interest payments. We're a country that within less than 7 years will have to borrow 100% of all discretionary spending that is other than, I should say, the mandatory entitlement spending and the interest on the debt. Everything else will need to be borrowed, including military. We're a country that I think has run out of road, and you know, I think that you will see a much greater percentage move in these types of assets like silver and gold as we get closer and closer and closer to the end of this system, which, you know, for a very long time there were no alternatives, not even anything close to challenging the dollar for its status as the ultimate settlement currency. You'll notice I say the word settlement rather than reserve. I think there has been a concerted effort by a lot of the big countries around the world to look at gold very differently than before. Now, I know you asked me about silver, but the point I'm making is this, is that one of the things that has made the dollar so demanded and so strong is the liquidity and the safety of the bond market, which, you know, it's not supposed to be more volatile, the 10-year treasury, than gold, but indeed it was last year. And so when we talk about the way nations are looking at this country, they are de-dollarizing, they are selling treasuries, and I believe using gold as an alternative to the treasury bond, because, you know, if you go back to the year 2000, S&P is up 7% per year, gold's up 7.8% per year. The bond market, nowhere close to either of those numbers. And when you talk about shifting on a 25-year period, looking at a 7.8% annual return on gold at a period of time where, you know, you could argue it really hasn't been allowed to trade freely, yet has still managed almost an 8% return without the counterparty liability that the U.S. Treasuries have. And you look at what's happening right now, where, you know, the Fed is having a very, very, very difficult time issuing bonds of any maturity, of any length of maturity, and we keep issuing these short-term notes and bills because I don't think there's any demand for the back end of the bond market. So what that symbolizes to me is that you have countries like China, Japan, Russia, Saudi Arabia, all of these countries that are favoring gold over U.S. Treasury bonds. And when we talk about the dollar, I mean, look, the market goes nuts because, oh, Janet says, well, we're not going to need to borrow as much this time as we thought for the first quarter. But, you know, okay, so it's only 700 or 800 billion instead of a trillion. Yippee. And all of a sudden everyone celebrates. It's like, I only have to do half a shot of heroin this time, or 3/4 of a shot, not the full shot. So yeah, well, I mean, that's exactly what it is. And but yet, if you look at what the Fed has done all along, or the Bureau of Labor Statistics, we're constantly being lied to. And they'll come back and they'll revise those numbers. I mean, it is an election year. They want to give a little bump to the equity market. But it's like you keep hearing all this stuff about, oh, the labor market is so. We got the labor numbers coming out here in the next day or two, which, you know, again, it's all of the metrics by which we are gauging our decisions, or the Fed is, or the world is, are lies. And look, there's no better way to look at it than look at the unemployment numbers that were quietly revised down for the entire 2023 by 440,000 jobs, or 40%. And the Fed bases its policy upon full employment and upon, you know, stable prices. Well, we know inflation is a lie, and the numbers coming out of the Bureau of Labor Statistics are a lie. The point of it is that I think the world is tired of our lack of transparency.
Thank you for watching today's video, where we had the opportunity to learn about the precious metals industry from Andy Schectman. We hope you learned something new and enjoyed this conversation. If you enjoyed it, please give us a thumbs up, share this video with your friends, and subscribe to our channel for more episodes like this. Please keep supporting us and protect your investments until next time. See you in our new video tomorrow.